The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at who's leading in the Timer Digest. You'll be surprised, not me. Steve Rhodes, #1. Can you believe that? We also have Kerry Szymanski, one of the first people I met here in Tucson way back in 1994. Kerry does a great job with his harmonic trader. If you remember, we also have Stan Harley as our guest today. Stan has been #1 before. Arch Crawford has been on the list. Tim Bost was just on the list last month. Bill Meridian is on there as a perpetual leader all the time. So we have quite a few of these people coming on as our guests, which we're really happy to see. Folks, I have something really an interesting story to tell you. Over the weekend, I had a call from someone up in the far, far northwest that happened to be short natural gas. If you'll remember, we were looking at natural gas very, very closely on Friday because we had a really good buy signal early in the morning. It went down exactly to the 78% level. And then as you can see through the rest of the day, the market had a tremendous rally, and it culminated with a Gartley pattern being formed up at that 454. Well, this young man, well, he's not quite young, but he's a lot younger than me, went short at the 454 level. And of course, it closed really good at 430, so he's ahead 25 handles. He was happier than you can possibly imagine. And then at 8 o'clock Sunday morning, I get a call, and he's totally panicked, and he's afraid he's going to lose everything. And I said, explain to me why. And he said, well, he said the record cold weather coming into the Northeast is going to drive prices up a lot. And then there's a new report out from the government saying that the climate change is going to bring in more cold and wet weather and all this stuff. And he said, I'm afraid I'm going to lose everything. And I said, you got a 25 handle lead, for God's sake. You're not underwater 25 handles. I said, what do you do if it opens lower? He said, oh, it cannot possibly open lower. And I said, yeah, right. Well, you can see by the chart up there that it opened lower by 50 handles, folks. It went all the way down. We broke $4, if you can imagine that. And, of course, he was very, very happy to hear that. The reason why I'm bringing this up to you is the fact that just because the news comes out, a lot of times, you know, the news is already in the market by the time things happen. These folks that do these weather reports, you know, they know when these cold fronts move and shift and all this stuff. I mean, Rich Anderson pays an arm and a leg, and so does Simon Lee to get these, you know, sophisticated weather reports ahead of time. But the price action is what you want to look at. I mean, after we hit 454, the market dropped 25 handles. I mean, if that wasn't some type of indication that something was changing, I don't know. But anyway, we'll leave that as it may and then move on to what we're looking at. We will have Stan Harley as our guest here in just about 20 minutes, and you'll always enjoy his work. But we'll take a look here at the DAX this morning. Those of you that belong to the newsletter service and the 24/7, I sent out a special video Sunday morning about the strength of the stock market, that we were looking at something extremely bullish. We're seeing it here in the DAX. It gapped up this morning, has continued to hold the gap at least for now. But also, if we take a look at the FTSE, which is also under a great deal of pressure because of what's going on with Brexit and the battle against Theresa May, which is always nice. We get to follow the politics and the UK, well as ours. You also noticed that one gapped up. So that tells us that there might have been something really important happening in the stock market around that full moon and all those cycles that we were looking at coming in the fourth week of November. Now, those of you that get the letter, I've given a pretty extensive explanation of why things were happening. And if you go and look at the FANG stocks one by one, you're going to see the exact same pattern on 4 of them. 4 of them have perfect ABCD patterns. You're looking at Apple, Netflix, Oh, Apple, Netflix, Amazon, and Netflix, Amazon. I can't think of the Facebook. All have three drive to a bottom patterns, and then Google has the double bottom pattern that is setting there. Boy, if that's not a bottom, then boy, there's nothing but red sky below the market. If we go below those lows of October and November 1st and October 28th, that would be a very, very negative sign, in my opinion. But right now, it's set up for a pretty good rally. It's been a 20% decline. We've had these before. It's been exactly what happened in 2011. So this is the second one we've had in 8 years, so it's not a big deal. And it did it relatively orderly. We didn't have anything really dramatic happening. We had some negative news going on all the time, but we also have positive news, so it shifts back and forth. The thing that we have to remember is we have some big things happening this week. The Brexit thing is coming to an end here on December the 12th when they have they're going to have the vote on Parliament. And then also we have the meeting with Premier from China, and President Trump is going to be on Thursday, so that'll be interesting, and we're coming into some pretty interesting spots here in some of these commodity markets. I wanted to share with you from our good friend Mr. Z. He brought up the chart of sent to me last night of Brent. North Sea crude. That's the premium crude, and you'll notice that it's setting right at a 61% retracement from the July low. And remember, it's gone from 87 down to 60, without even batting an eye. So we've had some type of support coming in there. And if you look at the long-term weekly cycles here in the crude oil, you'll notice that we're over something that's probably pretty important, because we're right near the 61% retracement, down around 49 and change, which is the 78% retracement from the low in July. Now, when we have Stan Harley on, I'll try to walk through some of these cycle things that he uses that might help us get some idea of how do you look at some of these things. It's going to be very, very interesting. Remember, folks, that we've been talking about Bitcoin since early March. If you remember, we were looking at that monster ABCD pattern that ended at 3,800 to 4,000. We're trading at around 3,900. And we got down as low as supposedly 3,200, but the bid offer on those trades over the weekend was something, it was ridiculous. It was $300 and $400 and $500 a share to buy. In other words, if you wanted to buy, you had to buy at $500 a share higher, and if you wanted to sell it, you had to sell it $300 to $500 a share lower. And that's because these are not organized exchanges, and this is not about Bitcoin and cryptocurrencies. It's about blockchain technology. Anyway, we are going through the fourth major 83% correction that we've had in Bitcoin since it started way back about 14 years ago. And so this is just as a normal correction. Believe it or not, when you look at this, you don't think that it is, but we've been following this day by day, or week by week, and you can see that it's been following the patterns relatively nicely, and now we're down here at this level that nobody wants it, and guess what? This is probably going to be an interesting bottom. I have never traded the cryptocurrencies. I don't plan to in the future, but I do follow it because it's acting technically very, very well. That's all I can say. This is not what I think is what they call a bubble. It doesn't have any of those characteristics. It's been trading too nicely to be a bubble. Bubbles have vacuums. This is not a vacuum that we're seeing here. So we're going to take a break, pay a few bills. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I wanted to post a couple of stock index charts from around the world here to give you an idea of what we're looking at. The first one, of course, I posted is the Hang Seng Index. You'll notice that we had that island reversal pattern back there on October the 28th when we were making our bottom at 2,600 in the S&P 500. We had the big gap up and then the pullback to test the bottom part of the top part of the island, and then we had the move that went up and then back down again, and we closed relatively strong on Friday, which was another indication that this market wanted to go higher, and it is certainly I think it's 1.5% higher already. It's closed now, but it's gone quite a bit higher in Asia. If we go across the terrain there a little bit into China, you're going to be able to see here, this is the FXI, which is the ETF for the Chinese shares. You'll notice that on this one, we came down and made a perfect 61% retracement from the low of 2016. That was to the tick, folks. That was just 3 weeks ago. It was also right at the 78% level from the low in December of 2017. This is nothing more than a normal correction in a bear market, actually, in a bull market, because you made a higher high in 2018. And look at, you have a 135 pattern. You have the low in 2016, another low in December 2016, and then the recent low here in October of 2018. Folks, there's an old adage in the market. There's nobody as bullish as a sold-out bear, and I have to raise my hand. I've been very bearish since October 1st, and after looking at these charts these last few days, boy, it's pretty hard to be bearish. Now, if we go below those lows, I'm going to be the most bearish person in the world. In longer term, I'm still very, very bearish, but this thing is set up to knock the socks off. I mean, it really is. I mean, I haven't seen 3 drive patterns in a complex like the technical issues in a very, very long time. It doesn't happen that way very often, but they're all coming in and they're hitting at different days. I mean, they're not all making it at the same time, so the pattern is good, and it just looks like it's very, very interesting. Now, there's a lot of talk, I know, about Mark Zuckerberg and the fact that what's going on with Facebook. There was a lot of support down there at that 130 level, and we hit that and bounced a little bit, but we'll see. All I can say is as long as we don't take out those lows of last week, I think we're going to rally, and most probably the rally will last 3 to 5 weeks. That would take us into near the Christmas holiday, and that would be an interesting time, to look and see what the pattern looks like at that time. But right now, it's really difficult to be bearish, these stock index futures, given the fact that they completed such monstrous patterns, over the past weekend. So that's really very, very important from a technical basis. Remember, this is all technical. This has nothing to do with the fundamentals, as thank God it has nothing to do with politics. But it does show that these markets do follow, what the traders are doing. And I think there's a great example of that, of course, today is in the natural gas. I mean, to see the natural gas with the most bullish news you could possibly get, the coldest winter in 140 years, and the market gaps down $4,000. I mean, here was a guy up in Saskatchewan that thought he was going to have his head handed to him, and he ended up with a big plus in his wallet. And fortunately, he's going to give some socks to the gospel mission. God bless him, and will hopefully help those folks out. Folks, if you ever want to see how things are tough, I know you see people in the street that are homeless. Go to one of these missions where these people go to for their meals and see how tough it is on them. I don't know what's happened in their lives. I don't profess to try to happen, but my goodness, they're going through some really rough times. So try to help people during the holiday, especially in the winter. I know it's 86 degrees in sunny Miami today, but for heaven's sakes, it's not quite that temperature up in the northwest, northeast and northwest. So try to help the folks. It's always good to do that, and especially to the veterans. Now, we've had a question about the bonds. Folks, this bond market is just flat out bearish. I mean, this is one that we looked at last week. We got right up to that 140.16, which was the ABCD pattern right at the 382. We're trading about a half a handle under that right now, and it looks like this is a completed ABCD pattern, and we'll probably be moving down. I know the Federal Reserve is coming in on the 19th, I believe, of December, but they follow the market, folks. They don't make the market. The market is made by the true market, which is the real interest rate market that topped way back a year and a half ago. And the market rates have actually been going higher since then. They've held them down artificially, and that in itself is a problem, because this whole thing that we look at is based on debt. And if we look at this chart from Ray Dalio, you're going to see here that we've been in this debt bubble for quite some time, and you'll notice that the actual height of that bubble happened in 2010, and we've been drifting ever since. The problem, folks, are those numbers on the right where you're showing 150, 200, 250, 300%, 350% of GDP. That means we're borrowing too much, and that's not good. So we'll see how that ends up. Now, I wanted to share with you, before we come on with Stan Harley here pretty soon, a chart from our friends at the Elliott Wave Theorist on the gold. Here they are looking at something very, very bullish on gold. They believe that these lower bottoms, the higher bottoms that we've had here are bullish, and they certainly could be. And if we get above, that 1233 level, I'll have to assume that we're probably going to go, up around a higher level. But to me, on a long-term basis, this is a still bearish chart. And believe me, I was as bullish as anybody was, back when it was at 1167 and 1197. And now I'm standing aside here, and we're actually on the short side by a little bit. So these are just a few of the ones that we're looking at. Someone asked a question about, day trading. The question was, can people make a living day trading? Folks, believe me, there's a lot of people that do that. All they're doing when they're day trading is they're taking the things that you look at on the charts, and they're condensing them down into a shorter time frame. If we had the time here, which we don't today, is you could look at just the natural gas, as wild as it is, with a $5,000 swing. I mean, it still has beautiful patterns in there that are absolutely easy to trade. I mean, it moves in 1,200-point increments sometimes, and that's exactly what happened. We had a 1,200-point rally, or $1,200 rally, and it backed off $800. So you're looking at $800. That's 16 points in the E-mini. That takes a lot of time, to do that in the E-mini. So that's what we're paying attention. We got a question here from Mr. Z, and we want to see. Yes, I do. Ever since you showed it to me, my friend, I certainly do. I did. I wasn't in it. I wasn't in it over the weekend, of course, but it certainly was. My friend up in Saskatchewan certainly was, and he was. I mean, I wish you folks could have heard his voice, because if I had it on tape, I'd play it. But he was absolutely scared he was going to lose the farm. And it ended up being, a big plus, and that's mainly because it's already in the market. I've seen that so many times. It's truly amazing. I mean, it's just amazing. Hey, we're going to have Stan Harley in, folks, so stay tuned. Popcorn and Coca-Cola on the agenda.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I guess Florida. Mike, are you there?
The full moon and market tops and bottoms. I thought at one time you had said during a bull market cycle, we usually see our tops at full moons, and during a bear market cycle, we may see bottoms at full moons. Correct me if I'm wrong on that.
Mike, I don't remember saying that, and the reason why I don't think I said that is because I believe very strongly in the full moons and the new moons, especially when they're accompanied by, where you have the close of apogee and perigee coming in at the same time. Steve Rhodes has done a lot of work on this, but I think it varies. Sometimes it'll be on the full moon, it'll be a high, and sometimes it'll be a full moon on the low, and that's because
Right.
I think it shifts. Remember, it's a 14-day cycle, so it has a tendency to be a shorter term one, but for short-term timing, it does a pretty good job. And of course, we're over that right now because we had a full moon last Friday. So that's what I think it is. I hope that's correct, but I've always, ever since I've been looking at this, I would have been able to see if there was some type of a positive thing with the full moons and negative with the new moons, but I haven't been able to see that. All I know that it's a turning date, usually a 7-day trading day turn date.
All right. Thank you.
Okay, thank you very much. I appreciate the call in. Okay, hopefully we might have Stan on the line now. Stan, do we have you on the line?
Good morning, Larry, with
Good
popcorn
morning.
and Coca-Cola. Yay, from
Good morning.
Phoenix, Arizona.
Yeah, I know. Thank God you got out of Thousand Oaks just in time. I think you used to go to that borderline, didn't you? That nightclub that was attacked.
I did. I lived in the
Wow.
Thousand Oaks area for 34 years.
Wow. Wow.
And yes, I have been to I have been to the borderline many times. Yes.
Well,
Very sad.
Stan, I want to compliment you. I was looking at your letter on Saturday, and you had a big, bold headline saying "Upside Acceleration Imminent." And it looks like we're up 250 points this morning. What do you think here? What's going on?
Larry, I think the stock market is heading higher. We were last on about a month ago. I said I thought we were very close to some kind of important low. And we saw that on October 29th. Now, 16 days later, we've seen what I call a retest of that low. And we need to prove this, of course, but I think it's probably going to be a successful retest. I track what I call the big five. and I look for confirmation or divergence among those five components. And for me, the big five are the Dow Jones Industrials, the Dow Jones Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. And in any measured move, either up or down, I want to see all five of those components confirming. But when we get to important pivotal turns, we tend to see one or more of those components falling off either the new high list or the new low list. And that's what we saw up at the top in August, September, October. We saw each of those components peak out. Finally, the Dow was the last one to top on October the 3rd. And now we have the same thing in reverse here at the bottom. On October 29th, we saw what I call a price shock, where we saw all of the indices, all of the components that make up the big five plunge to new lows. But Friday, we saw one of the components of the big five, that's the NASDAQ Composite, break to a lower low, unconfirmed, I might add, by the other four. And that's exactly what I want to see that defines a cycle bottom. I want to see a drying up in the selling pressure, and I want to see a fewer number of components that make up the big five making new lows. We saw that on Friday, and I thought if the low didn't come Friday on the close, I thought it would come Monday morning. Here we are. So time will tell, but I think we're looking at the 35-week, 8-month cycle bottom right here, right now.
Okay, we have a question from one of our listeners that did some reading in the Hearst book. He asked the question of if you've done any work with Fourier analysis in your cycle work.
I have, and I'm an aerospace engineer by training, so I have a lot of experience with those mathematical techniques. However, with respect to my cycle analysis, no. I don't use calculus. I don't really need that. I just need to understand the numerology and do a lot of statistical analysis. So, no, I don't employ Fourier series or Laplace transforms or anything like that in my form of analysis. What I do is I start out by just looking at a chart visually, marking off the lows, and then I put the data points into a spreadsheet and do a statistical analysis of the data. And in that, I am able to compute the mean, the variance, the standard deviation, and so forth. And that helps me define the cycle length and also look at what the historical variance and standard deviation has been. And then I can project that into the future and say, okay, the next recurrence is due within this time period, plus or minus X number of time units based on the historical standard deviation. That, in a nutshell, is what.
Do you have that in an English version? No, I mean, you know, it impresses the heck out of me. Let's just put it that way. Where we can see that in the work that you do, which is really, really superb. I have a question. Back in the old days, and going back 40 years ago, when Ray Frechette took over from Hearst and did that, I can't even remember what was it called. Used to get them every Saturday morning by special delivery. Cyclotech. Remember, we used to get the Cyclotech things. I don't know if you ever got those or not. That showed the different cycles.
I remember that. Yes.
Yeah, and I don't know if you ever followed through with any of that, or because I did that until they stopped working because they would shift back and forth, and then we found out that the summation index that Hearst used was not very good, nor was his nominality cycle, which didn't turn out to be pretty good. So I just wondered if you ever followed through with that, because it worked really good for a couple of years, and then it just got totally out of phase.
Yeah, I do remember that, yes. Here's the problem, Larry. A lot of people who look at market cycles, there's some problems here that I don't think they understand, they don't deal with. Number one, you need enough data going back as far as you can get it, because the sample size that you're looking at may not be long enough. There may be some other cycles at play that will cause the cycles that you're examining to distort, and you're not aware of it simply because you don't have the data available. So one has to get data as far back as possible, and that may not even be long enough when I say as possible.
Sure.
The other issue is cycles are not always a fixed beat oscillator. They tend to expand, contract. Sometimes they skip a beat, and only later to recur. So it's nice to sit down and look. Oh, okay, here we've got a low every 40 days, plus or minus zero. Wouldn't that be nice? But that's not how it happens in the real world. They are a wonderful tool, but one needs to understand the little nuances, kind of the finer points of how to deal with cycles analysis.
Okay, Stan, we have to pay a few bills. Could you stay with us? We have a question on gold and also a question on treasury bonds. So we'll be back in just a moment with Stan Harley of the Harley Stock Market Letter, 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Stan Harley of the Harley Stock Market Letter. We have a question about two markets, if you don't mind, Stan. Treasury bonds and then gold after that, if you don't mind.
I think the Treasury bonds are making a low right in here. If one will look at a weekly chart, you'll see that important standout lows tend to occur about every 20 months. And that's half of a 40-month cycle. And we are right about 20 months from the prior one, which is 20 months for the low before that, and about 20 months before the low that happened in late 2013. So I see bonds putting in a very important low. With the 30-year, I see support at 137 and 16/30 seconds. We've bounced off that. And with respect to the tracking ETF, the TLT, we're bouncing off of 112.5. I see both of those lines as solid support here. I know you have a bearish bias, but I'm going to take the other side of that. I have a bullish bias to the Treasury complex.
Yeah, but Stan, you have to remember my time frame is 10 minutes. Yours is 10 weeks. there's a big difference there. Well, actually, not quite 10 minutes, but I do look at the 4-hour charts quite a bit. Stan, what about the gold and silver? Silver is acting so badly. My gosh, I haven't seen it lagging gold by this much in a long time. What are you feeling on that?
Well, I have a positive inclination toward the metals complex.
Okay.
I think longer term, I found clear evidence of a cycle across the tops that averages 94 months. That's just a tad under 8 years. And if you go back as long as you can get the data, you'll see about every 94 months, plus or minus, we tend to make major highs. The last occurrence of that cycle was in August, September of 2011. If you add another 94 months or just under 8 years, well, that takes you to the summer of 2019. So I think the metals complex is going to grind modestly higher into this next summer, and then we'll put in another high, and then tread lower. Longer term, I have a bearish bias to the metals complex. I think we're going to get back below the 1,000 area. Probably, I'd like to see a retest of the January 1980 high, which was at 873. I think we'll see that, but that's going to take some time, probably a few more years. Metals don't excite me, although near term, between now and the summer, I have a bullish bias, but longer term, I have a bearish bias. A tradable market, yeah, but nothing long term there.
Okay. That looks good. Stan, how will the folks reach you? What's the easiest way to make contact? Just email?
Email, or they can log on to my website, harleymarketletter.com.
Okay. Well, listen, I want to thank you for being on. We'll have you on again maybe sometime before Christmas as a Christmas present to our listeners here. So could we do that?
It would be my pleasure, Larry.
Hey, thank you, my friend. I hope to see you over the holidays. Get up north there to Phoenix. One of these days we'll have to get together and break some bread.
Come on up.
Okay, thanks a lot. Stan Harley of the Harley Stock Market Letter. Thanks again, Stan. We really enjoy having you on here, and we'll have you on around Christmas time for sure to see how we're looking in some of these markets, because if you're correct, we'd probably be making some type of a high around that time, but we'll have to wait and see. Folks, one of the questions that someone asked over the weekend was about the high-yielding bond market, and I wanted to bring this high-yield ATF HYG. That's basically the junk bonds. You'll notice that we had that head and shoulders pattern way back there in October of last year. Then we had the big move down. You'll notice we have double ABCDs coming in here at this level here. So this might be a relief here in the junk bond market. They might stop selling junk bonds as the stocks start to get a little bit of a rally in here if in fact that's what they're going to do. But it's completed, several of the shorter term patterns. Longer term, of course, it has some much lower price levels as we look at those, through this level. Now, when Stan was on, he talked about the divergence that we had in the New York stock, not the New York Stock Exchange, but the NASDAQ on Friday, where it did not make a new low. Which was very, very important. It held that old low at 68.01, had that little bit of a pullback last night and on Friday, and then of course on the open Sunday night, these things started to go up, and it was quite a bit higher. At least it started this morning. How it ends up, only God knows, and she doesn't trade. So we'll pay close attention to this. Someone's asking a question here about a Gartley on the E-mini at 2880. Yes, that's certainly possible. That's not up that much. That's only about 65 or 70 handles. And the way this thing is jumping around, it moves 100 handles anymore without any trouble at all. But folks, compared to the natural gas, this E-mini S&P and the E-mini NASDAQ trade like grandma's porridge. It just moves really slow in the pot compared to NASDAQ. To the natural gas. Natural gas today, just up and down today, since the opening, has had more than a $3,000 move, and it's only been open a few hours. So it really rocks and rolls over there, and it does a lot of ABCD patterns if you follow those. My goodness, they're just about everywhere. Now, one of our listeners sent this to me over the weekend. I wanted to show you. It's a blow up of the Bitcoin price swings. Now, these are they're more difficult to really to understand them, folks, because those exchanges for Bitcoin, these guys, they make Jesse James and Frank James look like Franciscan monks, because these guys, they put in spreads that you can't believe. 30-40% spreads on these things are unbelievable. You'll notice here on this chart, this was showing a low of around 37.50, just a little below 3,600, around 36.20, I believe. But the spreads on that at that time were over $300 a share. In other words, if you wanted to buy it, you had to pay $3,900 for it. And if you wanted to sell it, you had to pay $3,300 for it. That's a suicide mission, folks. You can't give up that big of a spread and expect to make any money. It's just too crazy. Now, the reason why I follow this is because of the Bitcoin is nothing more than part of the blockchain technology that I've been told that is going to be the internet squared, and so that's why I'm bringing it up, showing you the charts, because maybe down the road these things will be tradable and we'll have some history of it. But what we're seeing now in Bitcoin is our fourth consecutive 83%, and I'm talking within 1 or 2%, 83% correction since this thing started trading, if it was called trading, way back when it was trading at 12 cents or 14 cents a share. And of course, now it's close to $4,000 a share. Nothing like the $20,000 a share. The other thing to mention about the Bitcoin is that when it started trading at the Merc in December of last year, has got an open interest now of just over 3,000 contracts. Folks, that's that's a flat-out failure for a contract for the Merc. I mean, that's usually not very good. But if you'll remember back in 1982, on April 16th, 1982, the S&P was traded. And remember, the low in the stock market wasn't until August the 9th of that year. And after that, then the S&P started to get players. But until then, there were 3 people in the pit, and they were all related. So can't do that. We'll come right back, 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of the emerging markets, and you can see, looking at this is just a basically correction in a bull market is what it looks like to me. So I don't know if that's going to give any impetus to the rest of the stock market, but at least it's holding its own here. We'll have to wait and see if this is going to be the case. Now, hold on one second. I wanted to bring up a chart that someone's asked us about, and that is a OSTK. I don't know exactly what it means, other than it's related to the Bitcoin cryptocurrencies. I'll check on this tomorrow and report on it later. You can see it's gone from 90 down to 18, which is pretty similar to what's happened to Bitcoin. But this, I'll check on this with John Jameson, and he'll give me the real skinny on it, and we'll get a pretty good idea of looking at it. Now, I believe that the gold and silver are still heading lower. We're trading around 1223 now in the gold, and silver went up to the 61% retracement last night at 1440 and then gave up the ghost pretty quickly. So I still believe that these have a tendency to go lower. But if we get gold above that 1235 level, folks, I got to throw in the towel on that, because that if it gets above that, it's still got a chance, to go through. I'm not an Elliott wave person, but I do respect their work. And, my work is quite simple. It's basically A, B, C, D, Fibonacci, do a few time counts, look at the new moon, full moon. And the full moon here in the desert is just absolutely spectacular. It's just so big you can almost reach out and touch it. So remember, this is the holiday season coming up. I want everybody to reach deep down in their britches and help the poor folks. Man, there's some people out there that are really hurting. And if you don't believe me, just go to one of these shelters and see what's going on. I don't know what turned their lives around that way, but and especially veterans. So try to keep a close eye if you can help some folks like that. Anyway, our guest tomorrow is going to be none other than Samuel Archibald Arrington Hicks Crawford, Arch Crawford of Crawford Perspectives. We'll have a little bit of history and a little bit of astrology. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!